Welcome back to the morning show here on Arise News. I'm Kechi Nana.
And I'm Rufai Sedi.
Brexit, the term which refers to Britain's decision to pull out of the European Union, is coined from Britain exit.
Right, it's on record that the United Kingdom was the country to demand an exit from the European Union since its establishment about 70 years ago. It will also be recalled that the decision to leave is a direct consequence of a referendum poll with 52% of the population voting leave. Over 48% voting remain. Very close one when it happened.
Since arriving at the decision to leave, analysts have, however, attempted to predict events that will follow and likely implications.
So joining us now to discuss Brexit and its looming effect on the Nigerian economy is Sunny Ideh, a United Kingdom-based public analyst who has worked as an investment banker with JP Morgan Cazenove, Bank of New York, Barclays Bank UK, Europe Arab Bank, as well as providing consultancy services for blue-chip companies from Asian markets and seeking public-private partnership with Nigeria and Ghana. It's a joy having you real quickly. This is not the first time the UK tried this. A lot of people think it's the first time. The first time, very well, if you remember, was the time of Harold Wilson, right. Pretty much in the 70s. But narrowly, they voted Remain. Right. And historically, Charles de Gaulle has never said he never trusted the British people. In fact, he voted against them not to be members of the EU. Is it what everybody's saying about the UK that is panning out now? That they never really wanted to be in the Euro? They've always been Eurosceptics?
I think there's a lot of history behind, between the UK and the EU. One thing the UK economy is quite proud of, are the institution of the currency. And I think UK adopting that single currency has been the underlying tone between the relationship between the UK and the EU. And a lot of things have changed. Personally, I voted to leave. For some reason, of course, we discussed about it. But I believe it's something that's been on the horizon from the word go and where we are now.
So bringing it back to Nigeria, considering we're a former colony of Britain and a member of the Commonwealth with large trading volume, how do you think Brexit will impact on the prospect of trade in Nigeria with the EU and also with Britain?
Thank you. That's a very good question. I think that's why we are here now. I think what people need to understand is that every coin has two sides. And it might be a bad thing happening to the Europeans losing the British. But there's a phrase everybody keeps saying in the city in London, the Americans are coming. And for me, that should be the Americans and the Africans are coming. Take, for instance, in this time of services, Indian is the largest service provider to the UK. And with this happening, with hard Brexit, which definitely is going to happen, I see that happening. What are we doing about it? We're 6 hours from London, multiple flights between London and Lagos. We speak English, so it's high time and good opportunity for Nigerian businesses to start thinking we are coming back to UK to take businesses from UK.
In fact, last year, Theresa May, the former British Prime Minister, was here to pretty much talk business. And there was sort of like a currency agreement between Nigeria's Naira and the British pound sterling. Can you talk us through that agreement?
I mean, that, for me, is an indication that the role the UK will play, the role Nigeria will play in the pre- and post-Brexit. And one of the things, if you look at more and the forex exchange mechanism, you can in UK exchange Naira by sending the money abroad. And if I'm a local business in Nigeria trying to do business in the UK, how do I, get my Naira in the UK and get the right rate? So it's something that everybody knows that if we're going to foster a good relationship between the UK and Nigeria, we need to look at the other dynamics of exchanging our currencies. And I think that's something, the current administration needs to look into as well.
PwC recently brought out a report about the diaspora community.
Good one,
saying it brings about well over 27 billion US dollars.
That's correct.
Back to the country, cited America as a big diaspora community for the Nigeria. with this Brexit and the knock-on effect on the British economy, take for instance, Mark Carney has been talking, possible, that's the head of the Bank of England, has been talking about a possible recession looming in the air, and the stuff about interest rate. Will this affect that diaspora remittance? Because the diaspora remittance is so big that it's even bigger than the national budget of this country. Would it affect the diaspora remittance?
Thank you for bringing that question, asking that question. I think one thing we'll fail to acknowledge the direct impact of diaspora remittance to Nigeria, the impact having on the economy. Someone sending money to pay school fees, that's have a direct impact on Nigerian economy.
Exactly.
And I saw that 2 days ago in this day newspaper, 25 billion. I mean, I'm not too sure, but I think we made about 50 billion from oil revenue. So, and there's a projection in the next 10 years, we're going to see up to 10 to 15 billion increase in the remittance. So you can say with the new STEM visa, which is for highly skilled individuals who like to live in the UK to contribute to the UK economy in the area of science, engineering, technology, and mathematics, you will see in the next couple of months and years, people with such skills moving to UK to contribute to that economy. And what does that mean? A lot of remittance are coming back in. So whoever has done the analysis, they are speaking from well-researched.
So with the slowing down economy of the UK is one of the implications of Brexit. Now, what can you tell us about the capacity of a slowing down Britain economy to take on imports, to still take on imports from Nigeria?
I think that is, thank you again, for me, that is another key thing for the current administration to look into. I mean, it's an administration that pride in agriculture, trying to find alternative means to diversify from oil. But, we can't just talk about farming. There's other mechanisms in there. The EU are going to pull out, we're going to have issue with products and services. People can't move around. So what happened to the Tesco, to the Morrison, trying to get the vegetables, to try to have their oranges? So we can, as a nation, Nigeria, fill that gap the EU is going to be creating. And that means the government start thinking about, I call it, SPP, which is basically talking about storage, processing and packaging. Because, UK for standard, things has to be to the right standard, need to be quality control, quality checks, and individuals and businesses locally, to access the fund to set that kind of framework, it needs to be done with the support of the federal government and have something like in trade, like a trade hub, easy for UK businesses to come into the country, like a trade zone, free trade zone, very close to the airport. You can come in, do your businesses, do your inspection, ship it to, ship back to the UK, and it's a win-win for the Nigerian economy.
Let's look at FDI numbers. FDI numbers have been plummeting terribly in this country for quite some time. What will be the knock-on effect as regards foreign direct investment? I mean, you've talked about import potential, which is very good because the UK pretty much imports everything. Yeah. I know the onion I buy at Tesco is from Eindhoven in Holland. Correct. Yes. Orange from Spain and things like that. But FDI numbers, would it lead to a knock-on effect where we have a lot of UK capital? You're in the financial sector. Correct. You're in investment banking. Yes. Would it lead to bringing most of this capital injection into the Nigerian economy?
I think what is actually slowing down, and we all know that we cannot shy away from the insecurity. An investor wants to make sure their money is going to go into an environment whereby they can predict what's going to happen in the next 3 to 6 months, and they also want to be in an environment they know they can thrive. And the security is number one thing that affects FDI, and the exchange rate, the ability for you to be able to move your money out of the country, so you can't, and this is one of the key fundamental governing the EU, the free movement of people, goods and services. So if I'm going to start bringing money into an environment, I can't be there. I'm worried behind me that someone is stalking me. We have a good high yield returns, but we lost all this money to exchange rate. Then this is something the current, we just have new ministers in now. So there's something they need to really look into, because I know Ghana is there. We're just 6 hours away from UK. And one out of 5 Africans are Nigerian, you know, so we can do this.
I can imagine. I would like to say a very big thank you to you.
Thank you.
And one thing is definitely certain, we'll keep talking about the Brexit issue. I mean, as we try to crack it, maybe it's going to be hard border, the Irish backstop. Those are conversations we'll have in the coming days right here.
Thank you, Mr. Sunny.
Thank you for having me on the show.
It's been a great week.
It's been a great week. Yeah. All right, well, that brings us to the end of the show today. I am Nkechi Nnanna.
And I'm Rufai Saying thanks for watching.